Hi everyone, welcome to my channel. This is Talking Sense. If this is your first time coming to the channel, please do me a favor and hit that subscribe button. In today's video, we are going to be looking at Sibanye Still-Water. So it's a very interesting one. It's also one of my biggest holdings in my portfolio. So I am quite heavily invested in it. I am fortunate enough to have a lower purchase price than what the current price is now. And a lot of people have been buying Sibanye in these areas over here. I would say in the high 60s, between 60 and 70. A lot of people have bought there and have expected the share price just to go up. It is a quality company, and a lot of people were expecting it just to continue its journey uphill. And in the long term, I do believe that it will, but we are in an environment where the stock markets globally are quite shaky at the moment, and precious metals and gold have all been selling off, certain commodities. And Sibanye isn't in isolation. So this is an important thing to remember, that usually a company that is not fundamentally strong will sell off for various reasons: bad management, a lot of debt, bad future prospects. So all those things will lead to negative sentiment in the company, and then the fundamentals will reflect that. The share price will reflect the fundamentals. So that's the first thing I want to just express, if you are nervous about the share, is that Sibanye is not in isolation yet. So it's not the only share that's going down. Other companies like Harmony, Anglo Gold, if you look at a lot of commodity stocks, they've all been drawing down 10, 20, 30%, some of them. And it's difficult to predict if it will continue and where the bottom is, but we can minimize risk and plan entry points if we want to add further in our position. Now, for me, I buy every month in Sibanye, but I am waiting for key targets to add more money at beneficial points. So we'll have a look at a few key things here on technical analysis, and then we are going to look at the fundamentals. So we'll look at Sibanye's balance sheet, and we'll look at their income statement. Now, on the graph in front of you, let me just close this. The market is still open. It is currently the 12th of September, sorry, the 13th of September, Monday, and the market's closed in about 10 minutes. So the price will be changing in real time as you see it, SSW. You can see they've had a slight recovery today, 2.2%, which is music to my ears, but it does not mean that it's now reversed and it's going up. So there's a few things I want to point out. You can see that Sibanye was trending up in this channel. These two smaller lines that I have here, gray lines, and it's finally broken down out of that channel, which is very bearish. This point over here, you can see that it's broken down, and we are actually at a very strong resistance. So prior to this, 55, 54 was quite a strong area to hold because it was still inside that channel. So I'm going to just put that line there just to show you what I'm talking about. So in about this area here, this was a strong, let me change this line to this rather. All right. So in this area, yeah, we had a strong support, and it broke down out of that support zone, and you can see it's fallen out of that channel, which is a bearish sign, and it's held up reasonably well at 50 Rand. But in the short term, this could just be a short recovery, and then it could possibly make its way down to 44 Rand. So if you are looking to take a position, it would probably be smarter just to see what the price does and then wait for confirmation. So we might see a short retest up again to about 55 levels. And that will be a key area to see if it breaks. And if it breaks higher, then it's invalidated this short-term downwards trend, because then it will be setting a higher low. But what I'm expecting it to do is probably bounce off that area. We can see we had that rally today of 2%. So it will retest that previous support zone, that strong area, and then most likely bounce down, continue its way down. And you'll see that the next purple block is a very strong area, because that is when a lot of resistance was, we faced a lot of resistance at these levels on our way up. You can see dating back to 2016, that is when Sibanye reached a new high and then subsequently pulled all the way back and traded flat sideways until the end September 2019, and then started recovering, hit that new high, sorry, not that new high, that existing high from 2016. And then the pandemic hits, it sold off, and then it just exploded up. So this zone here is extremely strong, and I don't expect it to break between 38 and 45. I think a lot of buyers will step in if Sibanye gets to these levels. And that's where I will throw down a ton more to just take advantage of lower prices and capitalize on a cash generative company so I can benefit from the dividend yield. So that is probably the setup that I'm looking for. So buying now would probably be a mistake. You'll have this fake bull signal that indicates this fake rally up, which will probably trap some people up higher, thinking that the stock recovers, and then it will continue down. I would like for it to break up, ideally, but that is dependent on macro factors, precious metal sentiment, what's going to happen with the dollar, what's going to happen with the SA economy. There's a lot of parameters to consider. And at the moment, it's very bearish. So short term, I expect between 45 and 38, consolidation, and then long term, it's going to retest that 76, 77. I am pretty confident that it should go up, and over the next 2 to 5 years, you are going to be banking significant gains, because I think the tailwinds that Sibanye have are strong. So the runway ahead for them is exceptional. Now, before we look at their balance sheet and their income statement, let's just have a look at the RSI indicator. You can see we've hit this bottom part of the RSI. So it's telling us that it's oversold. And that is why we have this 2.2% rally today. I wouldn't call it a rally, but a slight recovery. So it's still oversold. So in the short term, like I said, we could see a drift up to 55, 56, and a lot of us would get excited, and we might even add more to our positions. But actually, you would want to add more to your position if you see a close above, I would say, 60 Rand. If we see 60 Rand, then it's forming a higher low, and it's breaking this downwards trend that we are currently in. All right, so you can see we are in this downtrend over here, and you want to break that zone before you add any more, because then that's giving you confirmation that it's breaking out of that bearish sentiment. So that's why I say we could see that rally up. You can see it's perfectly almost there in that support zone, in that resistance zone. It rallies up to that white line and then pulls back down into that channel, following that trend down to the next support zone. So if you are looking to add, you're going to wait for it to break past that resistance area now, Or if you want to add more, then you are going to want to wait to see a bounce off this area over here. The strong support, I would start accumulating from here. And that's the point where we should see the reversal. So I think from current levels, the risk that we are willing to take is, I would say we're looking at probably, let's go from 52 Rand. Yeah, let's say from 52 Rand. If we take it from 52 Rand, all right. Sorry, got the wrong one there. Let's take, there we go. There's the price range from 52. We could still be in a bit of pain here. 26% drop from the current level of 51.75. So it's not for the faint-hearted, because this is how cyclical stocks work. When they are out of favor, that's when you should actually be buying them, when they are neglected. So you also don't want to try and catch a falling knife. You want for clear signals before you go in for a new entry or to add to a position. So if you decide to buy now and you've got no position, you're looking at possibly of up to 30% drawdown. So that's quite a lot to swallow, especially if you have no conviction in the stock and you're just looking to make money. Now, why I say I believe and why I'm backing it long term is because the fundamentals are healthy. Of course, there's SA economic risk. There are risks that PGMs and gold prices go down over the long term, but I don't think that is realistic in my personal opinion. But let's look at the fundamentals of this company, and let me just tell you why I am so bullish on it. So what I'm looking at now is Sibanye's financial statements, and TTM, right, is trailing 12 months, which means 100. That means for the last 12 months from now, this is their revenue that they've earned. And everything is in thousands and in ZAR. So when you see 162,326,400, that is 162 billion Rand. If you take today's exchange rate, which is about 14.15, if you just go 162 divided by 14.15, you're looking at 11.4 billion US dollars is what they brought in revenue over the last 12 months. That is a lot of money. And you can see how they've grown that revenue. From 2017, they had 45 million, 50 million, 2018, 72 million, 2019, 127 billion, sorry, not millions, billions. And now the last 12 months, 162 billion. That is 5 years of consecutive growth. That's what I look for when it comes to a company. They're growing the revenue that they're getting in. And if the gold price or PGM prices continue to rise, then that revenue, that price increase is going to translate to even higher revenue. And even if those PGM prices or gold stay flat at current levels, it's just showing you how much cash they are still even making at current levels. So that's what I like a lot. Their revenue is going to stay profitable at current levels. Even if the price drops a little bit, it's still going to stay profitable. Now, the input costs are rising, of course, maybe higher wages, oil costs, and also because the Rand is strengthening, which means in dollar terms, that is going to weaken their profitability in the short term, because they earn money in dollars because they sell commodities in dollars. So that's what I like. And you can see the cost of revenue went up slightly. So like I said, that is the input costs, they've gone up. You see from 2020, it went from 85 billion rand to 97 billion rand. That could be just higher wages, electricity, higher fuel, just all their input costs that they spend to get that total revenue. But you can see that still translates to higher gross profit. And you can see how their gross profit has grown over the 5 years too. And that's quite a significant jump from 2019 to 2020 was even more significant. But from 42 to 65 it's also decent. That is a 54% increase in gross profit. So that's fantastic. They're growing. The operating expense has come down a little bit. Their wages have stayed the same from the year before. Taxes have gone up, of course, because their revenue and their net incomes come up. But if you look at their net income, that is what's growing. Net income, and that is very attractive to me. That's 44 billion rand net income. You can see in 2017, 2018, they were negative. That was because they had a lot of debt. They took off some risk and they benefited from higher commodity prices, paid down their debt, turned into profit. And just look at that massive jump from 2019 to 2020 to the last trailing 12 months. And next year, that's not going to be different. Maybe their gross profit margins might come down a little bit because their input costs are rising, higher oil prices, stronger rand. But if we see another rally in PGM prices, or there is a decay in the monetary system where people, higher inflation, people don't trust fiat currencies, what do you think will happen to gold? Now, if gold rallies, that means their profitability goes up too, because they can get more money for the same amount of gold that they're selling. So I don't see them not being profitable for the next 2, 3, 4, 5 years. I think they're going to remain profitable, although they might not increase their profitability as quickly as they did from 2019 to 2020 to now. That percentage growth might be a little bit slower, but they are still cash generative. And they are going to do a few things with that cash. Pay dividends, for one thing, which in fact tomorrow, the 14th of September, is the last day to trade. And that means if you buy after Tuesday, Wednesday, then you don't qualify for the dividends, which they will pay on the 20th of September, I believe. And this is the second time Sibanye is paying dividends this year. And I think their dividend yield is like something like 11% now. So as their share price goes down, their dividend yield rises. So eventually it's going to get to a point where the price becomes too attractive for people to ignore. And if you are a value investor, this is screaming buy. Not at current prices. Even at current prices, it's not bad, but based on the technicals, you are still going to have short-term pain. So I like that. Growing revenue, growing profits, growing net income, very cash generative. Now let's look at their balance sheet. Total assets, 134 billion rand. Total liabilities, 63 billion rand. So that is, they have more assets than what they have for debt, for instance. Current liabilities are 17 billion rand and current assets are 52 billion. So basically I can just go 52 divide by 17 and that gives me an answer of 3. So they are highly cash liquid. They've got enough cash to handle any unforeseen circumstances, actually even 3 times over, because their current liabilities are only 17. So that's short-term debt that they have to pay out, but the cash on hand that they have is 52. Look at the cash that they're sitting with is 20 billion rand. That's the cash that they've got on them. And they have to invest that cash, because obviously keeping cash, just like us, we don't keep cash in the bank. The miners are also have to reinvest that capital, either buying shares, buying back their own shares, which they will do, which adds value for us, pay out in dividends to reward shareholders, or make investments in other companies, which we have seen, like the European businesses that they are buying. So, and like I said, their income isn't going to take a significant hit, and they're going to have all this cash year after year that they have to reinvest, buy dividends, buy back stock. So there's a lot of value that they're going to give to investors. And when people realize this, I think they will rush to the shares. So that is very important. You can see, let's just look at their cash flow statement, and then we'll wrap up the video. You'll see that they are their free cash flow is 15 billion Rand. They've reduced their debt. They are rebuying stock for 826 million so far, but they plan to buy 5% of their capital back. And they are sitting with a lot of cash and a lot of free cash flow. So that's very positive in my eyes. I like it. And I think it's still a strong company, although I think many weak hands will be shook out of this market. Now, let's just go back to the technicals. And what we saw there was excellent fundamentals, but it's selling off. So why is it selling off? Like I mentioned, it's not Sibanye that's selling off. It's the sentiment around the market. People are pessimistic towards miners or PGMs at the moment, and it's sort of unloved. But that does not make it a bad company. So in the short term, I would say just be wary, understand the risks, understand that we are in this downtrend. Any uptrend is probably going to be a fake rally unless you see it close above 60 Rand. Then that will tell me that the trend has reversed. What we want to see is it break that, pull back down to that support, and then rally higher again. This is the point where you are going to buy back in that resistance zone. So you would wait for that confirmation of that close out of that, signaling that you're breaking out of that downtrend, a retest down, and then up. But at the moment, we're probably going to retest that resistance zone, pull back down to there, and then this will be the area where we should see a reversal. So depending on how low it goes, if that first support zone holds, it might not hold and it might go a little bit lower. And then we might see a pullback up. But you have to wait for that downtrend to be invalidated before you have a clear signal. So that's the thing to look out for. And I actually hope it goes down to 38, because then I need to sell things that I have so I can invest more, because you can see how much cash they have on their balance sheet, like I showed you, and that needs to go out somewhere. That needs to be paid to shareholders in the form of dividends. So I'm buying the share price for cheaper, and I'm able to receive more dividends because of the cash that they have on hand. So let me show you that cash again that they're sitting with. If I go to their balance sheet, you go to total assets, current assets, cash and equivalents, 20 billion Rand. That's a lot of money. And that's why I think in this zone here, I need to buy, because it's just too attractive to let it pass by. Now, if I can see that, and I'm no professional trader, I'm no professional investor, the hedge funds, professional investors, people looking for yield aren't going to be able to pass that up too. And that's when we're going to see demand rapidly increase for this share. And hopefully that translates to higher prices in the long term. All right, guys, so I know it was a long video. I might have been long-winded, but I just wanted to explain that. I hope you got some value out of it. And please, this is not financial advice. This is just what I believe, and you can use it for your own educational purposes. And I hope it gives you a better understanding of what's happening in the market and how some people might be interpreting what is happening. So again, if you haven't hit subscribe, please do so now. I'll see you all in the next video. So bye for now.